Good morning. This is Japanese Economic Review Channel. Today, we will analyze the market dynamics for June 2nd, 2026. The defining theme of the day is decoupling. While the U.S. markets continue to hit record highs fueled by AI and tech, the Japanese market is navigating a complex phase of profit-taking followed by a significant intraday recovery. We will explore these contrasting movements and what they signal for the near future. Looking at the closing figures, the Nikkei 225 ended at 66,734, down 200 points, while the Topix dropped 16 points to 3,924. In stark contrast, the NY Dow and Nasdaq both hit record closing highs on June 1st. Despite a weak yen at 159.72 per dollar, Japanese stocks faced initial pressure. However, the massive trading value of 12.5 trillion Japanese yen indicates that market liquidity remains exceptionally high. The U.S. momentum was driven by two factors: easing geopolitical tensions and tech dominance. Initial fears regarding suspended U.S.-Iran talks were offset by news of an Israel-Hezbollah ceasefire agreement. Simultaneously, tech leadership continues to fuel the Nasdaq, with ARM Holdings, Micron, and NVIDIA leading the charge. This U.S. strength provided a psychological cushion for Japanese investors during the afternoon session. Today's Japanese session was a dramatic V-shaped recovery. After a soft morning due to profit-taking, the market hit a trough at 12:31 p.m., with the Nikkei plummeting 1,383 points to 65,551. This sharp drop triggered massive dip buying. By the close, the index erased most losses, nearly reaching its morning high. This resilience suggests that institutional demand remains robust, despite technical corrections. We saw a clear sector rotation today. 23 out of 33 sectors declined, with heavy selling in previous leaders like non-ferrous metals, automotive, Toyota, Honda, and machinery, Daikin. Conversely, capital rotated into defensive and commodity-linked sectors. Mining stocks like Inpex and securities firms like Nomura saw gains, indicating a strategic shift as investors realign their portfolios amid broader manufacturing pressure. The Growth 250 index fell for a third consecutive day, reflecting the broader cautious sentiment. Major decliners included Astroscale and QPS Holdings. However, it wasn't a total retreat. Certain tech-driven names like QD Laser and HPC Systems managed to advance. This divergence within the emerging market suggests that investors are becoming increasingly selective, favoring specific technological moats over general growth speculation. Individual corporate news provided some bright spots. Mitsubishi Motors announced the revival of the Pajero platform for 2026, and Penta Ocean Construction secured a major offshore wind farm contract. Additionally, consumer brands are leveraging IP, such as Kikkoman's collaboration with Chikawa. These updates show that while the macro environment is volatile, micro-level innovation and strategic restructuring remain very active. In summary, three themes emerge. First, global decoupling continues as U.S. tech ignores geopolitical noise. Second, the 1,300-point intraday swing proves underlying resilience in Japanese equities. This was profit-taking, not panic. Finally, defensive realignment is underway as capital moves into commodities and financials. Investors should remain focused on these rotation patterns as the market searches for its next sustained leg up. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.